Welcome to the Tesla Daily News podcast on March 3rd, 2026. Today, we're tracking a big Cybertruck pricing swing, fresh signals on full self-driving in Europe and Germany, a reality check on Robotaxi timelines in California, and a notable step forward for Musk's Grok inside the Pentagon. Plus a quick read on competition from China. Let's get into the stories that matter most for Tesla's business fundamentals and, ultimately, Tesla. Story 1. Tesla just made the Cybertruck feel less mass market again. Tesla has increased the price of the newer Cybertruck all-wheel drive trim from $59,990 to $69,990, about a $10,000 jump, or roughly 17%, only about 10 days after introducing that lower-priced version. Here's the context investors should care about. Cybertruck demand, production scaling, and margins are the three variables that decide whether this vehicle becomes a profit contributor or a distraction. The lower-priced trim looked like an attempt to widen the funnel and keep order flow moving. A rapid price hike, especially after a short window, reads like Tesla testing demand elasticity and using urgency-driven marketing. Details from coverage. Electrek framed the rollout as artificial urgency, while Autoblog reported strong demand for the cheaper configuration before the price moved up. Impact for Tesla. The bullish interpretation is margin protection. If Tesla can raise price and still sustain order momentum, that supports gross margin and helps the narrative that Cybertruck is not stuck as a low-volume novelty. The bearish interpretation is that Tesla is still searching for the right demand and pricing balance, and quick changes can create customer frustration, cancellations, and reputational drag. Takeaway: watch the next few weeks for delivery lead times and configuration availability. If lead times expand at the higher price, it's a sign Tesla found pricing power. If Tesla starts discounting again or pushing incentives, it signals demand is softer than the company wants to admit. Story 2. Full self-driving is being positioned for Europe, but regulation is still the throttle. In a recent Musk interview referenced in Chinese language coverage, Musk said full self-driving is expected to enter the European market in March. Separately, German coverage described real-world testing in Germany. One report highlighted about 45 minutes of hands-off driving through Munich, while also emphasizing remaining limitations. Context: FSD is a software margin story. Investors care less about the demo itself and more about whether Tesla can turn driver assistance into recurring revenue at scale outside North America. Details: the messaging out of Europe right now is a mix of progress and constraints. That's consistent with Europe's stricter type approval and operational design domain rules. Also notable, Tesla is offering more practical hardware and configuration choices in Europe, like the newly available 7-seat Model Y option for the refreshed Juniper variant, with a third row priced as a paid add-on. Impact for Tesla. If FSD can be sold broadly in Europe, even if features are staged, it expands the addressable software base across a large fleet, which matters for valuation multiples. But Europe can also slow launches and force feature downgrades, which delays revenue recognition and weakens the Robotaxi soon everywhere narrative. Takeaway: the key metric isn't social media clips. It's regulatory approvals by country and the exact feature set Tesla is allowed to monetize. Investors should watch for official European rollouts tied to subscription attach rates, not just beta availability. Story 3. A Robotaxi reality check in California. Data suggests not soon. PCMag reports that Tesla Robotaxis are not likely to hit California streets anytime soon, citing data that suggests Tesla has completed 0 of the roughly 50,000 hours reportedly needed for a driverless Robotaxi rollout on California roads. Context: Robotaxi is the biggest swing factor in Tesla's long-duration valuation story. If you believe high-margin autonomy revenue arrives soon, you pay up today. If it slips, the multiple compresses. Details: PCMag's framing is that, despite optimistic claims, the compliance and testing burden for California isn't being met, at least not yet. Impact for Tesla. Any credible report that pushes out Robotaxi timing can pressure sentiment, especially among traders who position around autonomy catalysts. On the other hand, Tesla's autonomy story is increasingly bifurcated by geography. Faster progress in one state or one city does not automatically translate to another. Investors should model staggered, region-by-region deployment. Takeaway: treat Robotaxi as a phased rollout, not a national flip of a switch. For Tesla, the nearer-term fundamentals remain deliveries, automotive margins, and energy growth, while autonomy is still a high upside, high uncertainty call option. Story 4. Grok gets closer to the U.S. Defense Corps, and that has second-order implications for Musk's ecosystem. A market note out of Taiwan reported that Tesla shares closed down about 1.49% on Friday, ending around $402.51. and highlighted that xAI's Grok was approved to enter a Pentagon-classified environment, while also noting internal government concerns about safety and reliability. Context: this isn't Tesla revenue directly, but it matters for the broader Musk platform narrative and investor psychology. Tesla's valuation is influenced by confidence in Musk-led execution across AI, autonomy, and robotics. Details: the same report suggests there was debate inside federal agencies about Grok's security posture. Impact for Tesla: indirectly positive for the Musk AI stack story. If xAI gains serious institutional credibility, it can boost the perceived viability of Tesla's AI-adjacent ambitions, including autonomy training, Optimus, and future services. But any security controversy can also increase political risk and scrutiny across Musk-led companies. Takeaway: for Tesla investors, this is a sentiment and narrative amplifier, not a near-term earnings driver. Still, it reinforces that AI is becoming a national security-grade procurement category, which can shape the competitive landscape for model access, compute, and regulation. Story 5. Tesla Energy keeps pushing toward utility-scale relevance with a new storage product. German outlet Chip reports Tesla introduced a new storage solution called Megablock in Las Vegas, described as a prefabricated energy storage system with around 20 megawatt-hours of capacity, positioned to supply whole communities, with faster installation and improved efficiency. Context: Tesla Energy is the less hyped, increasingly important segment that can diversify Tesla away from cyclic automotive demand. Storage deployments can be lumpy quarter to quarter, but the long-term trend is toward grid-scale batteries as renewables penetration rises. Details: the headline number to remember here is 20 megawatt-hours per unit. That's meaningful scale, and the prefabricated angle matters because installation speed and standardization can reduce project costs and improve margins. Impact for Tesla: if Tesla can standardize and scale deployments, energy can contribute a higher quality revenue mix, potentially steadier than auto, with improving gross margins over time. That can help support valuation if automotive margins stay under pressure. Takeaway: investors should look for order backlog signals, delivery cadence, and any commentary on Megapack and Megablock margin progression. Energy is still undermodeled by many traders, which can create upside surprise when scale shows up in quarterly results. Story 6. Competition check: BYD's sharp February slump could change the pricing war dynamics. Multiple reports, including Reuters-cited coverage, say BYD's February global vehicle sales fell about 41% year-over-year, the steepest drop since the pandemic period, and that China domestic sales were down sharply as well. Context: Tesla investors track BYD because it's the most credible large-scale competitor in EVs and plug-ins, especially in China and in export markets. Details: the headline is the magnitude of the decline, about 41% globally, and commentary that it extends a multi-month soft trend. Impact for Tesla: if BYD is under pressure, it can cut two ways. One, it could intensify price competition to stabilize volumes, which would be negative for industry margins, including Tesla's. Two, it could indicate demand digestion in China and a tougher consumer environment, which is also not great for Tesla. But it may also reduce the fear that BYD is on an unstoppable growth curve every month. Takeaway: watch whether BYD responds with aggressive discounts or shifts mix overseas. For Tesla, the key is whether China pricing stabilizes or reaccelerates downward. Before we wrap, one quick product and demand note. A French review highlighted a discount of about €3,500 on the entry-level Model 3 in that market, bringing pricing down to roughly €33,000. Discounts like this can support unit sales, but also raise questions about margin trade-offs, especially if the broader European EV market remains competitive. Alright, let's close it out. Today's big themes were pricing power versus demand reality, especially on Cybertruck, regulatory and timeline friction for Robotaxi and FSD in Europe and California, a meaningful step in Tesla Energy's grid ambitions with Megablock, and shifting competitive signals out of China. For tomorrow, keep an eye on any updates to Cybertruck delivery estimates, any official European language FSD rollout details, and whether regulators or agencies comment further on autonomy deployment requirements. If you want this kind of investor-focused Tesla roundup every day, subscribe to the Tesla Daily News podcast and follow us for daily updates.